and they only know what they're told. All right. When you use a broker, we're able to quote multiple companies and find out which company is going to best fit your needs. In years gone by, these big insurance companies were the training grounds for most agents. Well, that's gone away because everyone's gone to the broker model, and you don't really have a whole lot to put into it on a monthly basis. I've actually told people to get rid of their other policies with these same companies because, again, they have to make numbers. I don't. I say dump it, go buy a term policy, put a couple $100 into your Roth IRA or whatever, okay? Because you're paying for insurance, this isn't really working for you. It'd be best to go with a term policy. And I see those all the time, especially from a company from New York. Here's the other thing. A client, I might do that in a couple ways. I might do a level death benefit. If it's a couple $100 a month, you know what, the IRS limits, we're going to be fine with the cash value. Now I have people that do thousands and thousands and thousands of dollars a month. Well, guess what? I'm going to do a rising death benefit. That way we don't have any issues with the IRS. Okay? One of the other things I like to put on a whole life policy is a paid up additions rider. One of the best things you could ever add out there. The reason why is because it'll supercharge your cash value build up, and that's what you're in this thing to do at the beginning. You want to explode this thing. Paid up addition rider is the best thing out there. And by the way, you know, when you do business, how much is it going to cost you to access your money? Well, if you look at these big insurance companies downtown, guess what? They don't either. And that's why when I look at these, I always do use companies that are mutual insurance companies, number one, and I always look at companies that have fixed rate loan amounts on the back end. A lot of them have variable rate loans. Some of them are capped at a variable rate. I do a lot of business, and I get a lot of business from these companies back east because they bite you in the rear down the road. So let's look at some of the benefits of whole life. Most of them at the time of this video are 4% minimum guarantee with a dividend on it. Okay. Now when you back out the rates, I always look at the internal rate of return. So even if they're saying, hey, we'll give you 4 with a 3% dividend, doesn't mean you're getting 7. It might end up after fees you might end up with 6.1. So that's one of the things I look at. I also look at the cost of insurance. How much does it cost for that death benefit? Well, the lower the better. The lower amount that you pay for the death benefit, the better for you. House or car, it's your money. All you do is make a phone call. You call, they send you a check. There's no fill out this application, let's get you pre-qualified. No, it's your money. That's one of the nice things about this. You can access it anytime before you're 59 and a half. And if you decide to build it up, you want to take it out for retirement.